I want to welcome both Secretary Mnuchin and Administrator Carranza. I want to thank you both for being here, though far away, and all the members for being here today. This is our first opportunity to hear from both of you about the enactment of the CARES Act, in particular as it applies to small business. The CARES Act is landmark legislation. In less than 2 weeks, Congress passed the largest economic relief package in our nation's history. And now, after the passage of 2 further reforms, the Paycheck Protection Program is the largest component of the economic relief enacted by the CARES Act. On that point, I just want to say a couple things. First of all, it was the extraordinary work of many people. Staff, of course, worked tirelessly to make this possible. The partnership we had from both the SBA and the Treasury was extraordinary. Members on this committee, every single one participated. Obviously, the leadership of the ranking member, Senator Cardin, of Senator Shaheen, and of Senator Collins, who's not a member of the committee, but was part of our task force and really was invaluable in helping craft a lot of this. And I want the record to reflect that with the consent of the ranking member, we have invited Senator Collins to sit with the committee during today's hearing and participate, and rightfully so, because of her extraordinary contribution as, in many ways, the foundation of many of the ideas that became law. So I thought it was important to make that point, that for those who have lost faith in our ability of government to respond in a time of crisis and in a time for national unity, I hope they'll take some hope in the fact that that happened when it came to this. It would have been impossible without it. After we did that, it was up to the administration, particularly Secretary Mnuchin, who has been extraordinarily accessible, as every member that's been involved can say. Administrator Carranza, who's had an incredible amount of work to do to execute and administer the Paycheck Protection Program. And there were bumps along the road. No one would say there wasn't. But overall, the Paycheck Protection Program has been, in my opinion, an extraordinary success. It is by far, in my view, no disrespect towards anyone else, by far the most effective and most impactful portion of the CARES Act to date. I think in history we'll look back at it as an example of what government can do in a time of crisis to be helpful to our country. And if there's any dispute about that, then I want everyone to ask themselves, what would our economy look like today had there not been a Paycheck Protection Program? It saved millions of jobs and small businesses during the single most uncertain economic situation that has existed in the lifetime of anyone in this room and since the Great Depression. It took a new approach. The CARES Act was being negotiated, businesses, if we remember that time, were faced with the prospect of laying off workers, not because of the weakness in their business model or a cyclical downturn in the economy, because the government told them, you can't operate. You can't open your doors. You can't take customers. You can't do business. It is, in some respects, the equivalent of a taking, in which government in the public interest intervened and denied people the right to do something. And we viewed the PPP as what government does when it uses its power to do that, and that is to help and compensate those who are damaged by it. With no work available to be done, pure economic logic told these people in small business that the most efficient thing for them to do was to lay off their workers until more normal conditions were restored. But we knew that the most efficient economic outcome was not the best outcome for the common good. In fact, would have been catastrophic for our country. And so during the negotiation of the CARES Act, I, for example, learned about an entire family, a family that I've known for many years, that within a 72-hour period, the father was laid off, then the mother was laid off, then their 2 adult kids were laid off, and then the spouses of those 2 adult kids were laid off. In 72 hours, massive calamity for that family. You can imagine it was just the uncertainty around all this was devastating. And it's not something that temporary replacement of income alone can solve. The situation, by the way, was also bad for small business. Workers are not disposable inputs that can be discarded during tough times. They are integral members of all businesses, but especially of small business. And I have personally heard, as I'm sure many of our members have, from countless small businesses of the anguish, the personal anguish that many of them felt at having to lay off employees, many of whom had worked for them for decades. These were people that they knew. They knew their families, they knew their children, they had watched those children grow up, and they knew how much they depended on these jobs to make ends meet. What small business needed was not cheaper debt, they could take out against their future earnings. They needed a real lifeline. And what the economy needed was not just only government checks, but it needed to lessen the pain of the layoffs. It needed to reduce the layoffs altogether. And it needed, I think, as much as anything else, to preserve the connective tissue of a well-running economy, which at its core is being attached to dignified work. And that's why we did this program. Instead of a traditional loan, the program would have, instead of a traditional loan, small businesses would have whatever cost they spent on the survival of their business forgiven, as long as they kept their workers on payroll. As nationwide lockdowns shut down the economy, we, who worked on this, every member of this committee and those outside of it, had two main priorities. The size of it, we wanted to make sure it reached enough businesses and people, and we needed to do it fast. This was not something we had weeks or months to work on, and I'm proud that both of those goals were met. The scope of the lockdown met, we needed sizable relief. Initially, the appropriated funds for this program are now at $670 billion. It is a lot of money. It's larger than any other program enacted by the CARES Act. It's larger than the 2008 stimulus bill. By some estimates, it's the largest program since the New Deal. But the speed of the lockdown also meant we needed to get funds to small businesses quickly. The CARES Act, just to walk everybody through this, was signed into law on March 27th, exactly 7 days later, thanks to extraordinary and tireless work, which is easy to criticize for some who are watching from the outside, but we're talking about people that were there overnight, 4, 5, 6, 7 in the morning, barely time to get home, shower, and change their clothes, thanks to the tireless work of people working under Secretary Mnuchin and the Secretary himself, people working under Administrator Carranza and herself. The Paycheck Protection Program began approving loans 7 days after Congress passed it and the President signed it. Small businesses received PPP funds before millions of Americans received tax refunds, before people started receiving unemployment checks, and other lending programs run through the Federal Reserve are only just now beginning to operate. That's not a criticism of those things. That is just to describe the extraordinary effort that it took to stand up a program that didn't exist in just 7 days. When this program began on April 3rd, no one on planet Earth had ever made a PPP loan, had ever approved a PPP loan, had ever processed a PPP loan, or had ever applied for one. And in 7 days, that began. The achievement of these priorities came at the expense of others. Some companies who should not have received the loans received them. We've read all about it. It shouldn't have happened. They represent a minuscule percentage of the overall program, however, and most have since returned them. Computer systems were strained under unprecedented levels of activity. Guidance released to solve problems created unanticipated problems. But again, I want to be clear. The bumps in the road were and are the price to pay, unfortunately, for a program that, in hindsight, we now know is among the most successful programs that government has ever done to rescue an economy. Economists and financial forecasters predicted last month that May 2020 would be the worst month for job losses during the duration of the pandemic. It was expected. This is what everyone expected. 8 million Americans would lose their jobs in May. They predicted that unemployment would be 20%. Some even speculated that it might end up surpassing the Great Depression's 24% rate. What would that have looked like? And what would that have looked like given everything else that's going on in the world and our country right now? Well, I can tell you, on an economic point, it would have bankrupted the central promise of economic opportunity in our nation. Without PPP's temporary lifeline, tens of millions of Americans would have been permanently separated from their livelihoods and stripped for long periods of time from the opportunity at dignified work. Many would quickly be condemned to poverty. Some over generations. Parents would be unable to provide for their families, tied indefinitely to government assistance. Without PPP, we would have faced the extinction of small business as we know it. Countless blocks of urban and suburban America would have been hollowed out. Vast expanses of empty lots where brick and mortar stores once sustained communities. It's tough out there. There's still a lot of suffering, economic pain, and of course, the pain related to this terrible disease. But the most catastrophic visions did not come to pass. Instead, forecasters, to the surprise of forecasters and everyone, last month, 2.5 million Americans got their jobs back. The over $500 billion in Paycheck Protection Program funds dispersed through April and May enabled businesses to keep or to quickly rehire workers as conditions allowed. To date, 4.5 million American businesses have received loans equal to over $500 billion. And this, we'll know more when the forgiveness begins to come in, but this is equal to 50 million jobs. The average loan size is now down to $112,000, an amount that, based on eligibility criteria, means that the average business receiving a PPP loan would be one with 10 employees. A recent survey by the National Federation of Independent Businesses noted that 77% of surveyed small business owners had applied for a PPP loan, and of that 77%, 93% had received funding. As of June 6th, there are currently 424 community development financial institutions and minority depository institutions now in the program. They have accounted for more than 190,000 loans valued at $15.8 billion. And the SBA and Treasury have also set aside $10 billion in PPP funds for CDFIs to continue to lend. This is the record of a successful program. And again, I want to thank everyone, the Secretary, the Administrator, all the members of the Senate, and our partners in the House, and of course the President, for not just passing this, but working to implement it. I do want to comment on the Economic Injury Disaster Loan Program. The SBA, for the first time in its history, administered a nationwide disaster and grant advance program through an expanded version of the EIDL program, offering direct government lending and grants to eligible entities suffering injury due to the pandemic. To date, the SBA has approved more than 1.13 million loans of these loans, emergency loans, totaling about $79, almost $80 billion, and 3.1 million emergency idle advances totaling another $10.2 billion. The program has realized numerous challenges, both previously in responding to regional disasters and, of course, under this current one. In drafting the CARES Act, I raised concerns with the deficiencies of the existing EIDL program as a whole, which only accounts for roughly 2% of the disaster loans made by SBA. In particular, I was concerned that it would be challenging for the agency to handle a disaster of this extraordinary magnitude. As such, the concept of using traditional lenders instead of direct government loans to ensure capital was reaching the hands of small businesses as fast as possible was one of the reasons that gave rise to PPP. I commend the agency for standing up the EIDL program nationwide to respond to an unprecedented volume of applications within a very short period of time. Today, unfortunately, we see similar and new EIDL challenges for borrowers, including long processing and disbursement timelines and communication issues. As many businesses are also relying on assistance through EIDL to rebuild after the economic disruptions caused by this pandemic, we look forward to the agency addressing the current EIDL challenges and how Congress, how we on this side, can work to support the agency in making improvements to this program. Today is an oversight hearing. There are many issues that myself and members of this committee would like to raise to help keep this program running smoothly, especially as some businesses approach filing for loan forgiveness as early as this month. But we should begin by putting these issues in perspective and recognizing the choices that Congress and the administration had to make in order to make this program succeed.